All right, as you can see so far, I've covered time frame combinations, I've done market structure, I've done support and resistance. I think the next one that we can go to is trendline. So this is also an important concept. So after covering all of them, I'm gonna create like a playlist and put them in there. So we're now, before we enter anything, every week, make sure you visit them, revise. Because once you can understand these concepts and be able to identify, to apply them on your chart, I'm telling you, analyzing the market won't be as difficult. Even if you take a loss, I'm not saying if you are using these concepts you're going to win all your trades, no, but I'm just saying most of the time you'll be on the right side of the market, and if you take a loss, it's fine. You'll just try and reanalyze again and just identify where you could have went wrong, whatever. Mara, most of the time you'll be doing the right thing. You're not going to be confused at any point, whatever. So let's move to the next concept, which is the trend line. So trend line is another thing that is important. Trend line. So we can have two types of trend lines. We can have a bullish trend line, which is the one that we have in an uptrend. Okay? So the bullish trend line, for you to be able to draw a bullish trend line, what is it that you need? You need to have a higher high. What do I mean by that? If the price does this and then it comes like that, we can't put this and say it's our bullish trend line. We can't do that. Why? Because this is the high that we have. For us to use this point must give us, for us to use that point as part of our trend line, it must give us this move which is higher than the previous high, meaning we need to have a higher high. That's what I mean when I say we need to have a higher high for us to draw a bullish trend line. Up until we have a higher high, this point we can't use it. We can't use it. And if it comes back and then does this, still we can't involve this point up until the day it breaks the previous high. When it breaks the previous high, we don't have to involve this anymore. We update our trend line, then we put it from this and this. Then this is the new trend line. That's how you draw a bullish trend line. And what you need to understand, the bullish trend line going, if the bullish trend line is holding and it's not broken, just like you can see in this picture, it means we are allowed to buy. So if we have a support there and then the price comes and then it isn't broken the trend line, we are allowed to take a buy, and we are going to buy, continue buying like that up until the day the trend line is broken. Why one? So for as long as it is not broken, we're going to continue buying, or up until the day we hit a higher time frame zone. What I mean by that, Goring, if this structure that you're seeing here was drawn on H1, it means we're going to continue buying on that H1 up until the day we hit. Maybe higher time frame can be anything from H4. So we're going to do that up until the day maybe we hit H4 resistance. Then you stop buying. Or the day this very same H1 breaks the trend line, is broken, then you stop buying. So that's one thing. Those are the things that you need to know around the bullish trend line. We are going to buy all of that up until the day we hit higher time frame, maybe a daily resistance, or a daily bearish trend line, or a H4 bearish trend line. So that's the opposing structure, higher time frame opposing structure. Right? So if, let's say, daily is like this, né? And when you're not trading daily, you're trading my H4, and then H4 says buy, and then you're going with buy, and then the next H4 resistance, let's say it's inside here, resistance, and when you're buying your H1, you're not gonna say you can't say I'm going to exit here, right? Because this is the next opposing what zone. You can't do that. What about this higher time frame trend line, right? So you're going to continue buying up until the price hits the higher time frame opposing structure. Opposing structure can be resistance in this case, and it can also be what a higher time frame trend line. So if we hit this, price can react from that and carry on going down. Right? So that's what I'm saying. Even a trend line can be an opposing structure, which means we stop buying. And then the day the price hits, it breaks the trend line, we are no longer bullish. We are now moving to, remember, consolidation. And in consolidation, we don't have a trend line because we don't have a trend. We're not trending. In consolidation, we're doing this. We don't have a high, we don't have a low, we're just in between. We have a horizontal line, we just have resistance and support. That's it. And then the day we move out of this consolidation and we go up, it means now we have moved into a new trend. We have broken the high, we made a new higher high, which means if it does this and go up, now I must update my trend line. The new trend line must involve what? This point, because this point, what? It broke the high that we've been struggling to break, or this high. Let's say this is the high. We're doing this, and then all of a sudden we break the trend line and then move sideways. It means my new trend line must pass there and involve this. Then we are still what? In uptrend. Then you continue buying again. Mara, if we go up and then we break the trend line, and then let me make it like this. If we go up and then we break the trend line, right? I'm saying we're going to be in consolidation up until we break this, or we break this. For as long as we are in between those two, we will remain in consolidation. But what if the price does this? Now it moves to the downside. It means now it has broken what? Support and resistance. We have broken two structures. Now we are moving to downtrend. Then the new trend line will be there, which is what? A bearish trend line. For us to draw a bearish trend line, we just need to have what? A lower low and a lower high, which is what? This low is lower than that. This high is lower than that. Right? And for as long as we have a new low, we can put a trend line. And we are going to continue selling up until we hit a higher time frame support or a higher time frame opposing trend line, and or up until this trend line here is broken. That's it. That's all you need to know about the concept of trend line. So you must be able to link this concept of trend line with the concept of what? Support and resistance. Meaning, like I'm saying, we're going to continue selling up until we hit. Then you introduce the concept of what? Support and resistance up until we hit higher time frame support. Then we stop selling. That is it. We don't have to complicate things. Trend line, draw a fella higher high, which is the bullish one, or draw a lower low, which is a bearish trend line. Then we're going to trade, continue selling for as long as the two time frames of our combination, they are going down, and we are going to sell until we hit a higher time frame support. Then we start selling, because remember, if this is higher time frame support, we expect it to win over there. If let's say we're looking at H1, then we hit H4 support, or maybe daily support, then we expect this higher time frame support to bounce the price up and violate our trend line. Right? So once we hit that higher time frame support, we are expecting some reaction, meaning we can start looking for buying opportunities. That's it. We will now move to the next in the next video, the short video that I'm going to make. We will move to the next concept, which is what? We can talk about this one, and then these three I'm gonna link them together into one video. So I'm gonna do the one about the reversal signs, and then the last video is gonna be how to enter the trade. Then once I'm done with all of that, I'm gonna put them under one basket, which is gonna be a playlist where I'll be saying the concept about price action, so that way now how every time you come to the channel, you can just click that playlist, and you'll find all these videos under that playlist. Then you know that if you can just master these concepts, all these concepts that are here, then trading price action won't be difficult for you guys. All right, let me move to the next one.